Good morning, everyone. Welcome to the European crossover webinar. And we are seeing the indices just a little bit higher at the moment with Nasdaq up here at 14,375 and S&P's just a little bit lower. Just going to move this about. And just moving the same day VWAP. And as you can see, we're still within the ranges that we had on Friday. This Nasdaq has kind of been stuck, and S&Ps had pushed a little bit higher. I think they were aided by a little bit of a rebalancing issue also, but still holding up relatively well. And Bitcoin had found itself a little bit under pressure, but boy, it looks like we have really started to take off now here in Bitcoin. A little bit of move on for those lows. I do see that the economic calendar is actually light. We did get German import prices, and those came in at 11.8%. They're expecting 11.3%. And other than that, there's nothing left for the economic calendar for today. I'm looking even as we roll into the States, into the U.S. session, we don't have anything. We do have Dallas Fed Manufacturing Index. That'll be at 10:30 a.m. Eastern Time, but that will be it. Of course, later on in the week, we do have non-farm payrolls. That'll actually be a pretty big mover, to say the very least. But at least for today, it's relatively quiet. Moving back onto S&Ps, just gently easing back just a little bit after they made this initial run here. And we can take a look at what's going on with FX. I guess we can just move this over and make it real quick. Take a look where we stand here with Euro. Looks like a relatively quiet session. Look at this. Just not very much movement whatsoever. Take a look here with the cable. There we go. A little bit of a move higher. Aussie Dollar still holding up relatively well. They actually faded them a little bit on Friday as we came into some resistance. I think around 76.14, but they're once again in a very, very quiet session. Seeing dollar yen also just a tad bit lower. And moving into the cash dollar index, also a tad bit lower here. Going in, move in, and get ready for the analysis here. As I mentioned, fairly quiet economic calendar. So we'll just go on and jump in and get started with the analysis that we started for the week. Let's go on and switch into that window. And we'll go and get started with the euro. We actually believe we took a look at the weekly chart. Let's go on and move into that. Give us a little bit of a perspective as we start the week. So the euro held the prior 2 weeks low just above support, which you can see here is 1836. We're looking at the weekly chart to rally back and challenge the 1960 this last week. Resistance to start the week is going to be 1962. Obviously still bearish. And support is going to be at 1891. And let's take a look at something else here. Take a look at this profile, and I guess because right now FX is just quiet as quiet can be, but we don't see anything really happening here with FX land here. You can see here it's been fairly tight trading here. Nothing really to hang your hat on. And we're going and move this back to the Nasdaq. Let's go in and move into the cable now. While we're doing that, we'll also take a look to see if we see anything here on the euro. Take a look on the 2-hour chart. Boy, we are quiet as quiet can be, but you can see what I'm coming up with this 1962. But we're looking at a 2-hour chart and it's quiet. So let's go on and move into the cable now. Same thing here with the weekly chart, starting out with as we start the week out. So cable rallied last week and rallied back to near 140. You can certainly see that right here. Let's go and move this to the weekly. There we go. So cable rallied last week, going back to the 140 before retracing 125 pips to close the week. The pair is open to a secondary slide that would take us down to 36.95, and you can see that here. Support to start the week is going to be 38.36. With resistance at 39.60. And same thing here, we'll take a look at a 2-hour chart. Same thing here, relatively quiet, and we'll Ease back here on this weekly, and you can see we're coming up with this 36.95. We go all the way back here. You can see where we're coming up with this 36.95 here. Going back on the weekly. And we're, as I said, they have some pretty good solid support there, but they can make that, as I mentioned, secondary slide to that 36.95. With that, we're going to move into the Aussie dollar. Also take a look here on a weekly. So the Aussie spent the prior week retracing to the 76-cent area, finding resistance at the weekly level of 75.96. You can see that here. Resistance to start the week will be 76.16. With support at 75.63, followed by 75.37. Still bearish overall, but you can see how we came right back into this. And key area here, key weekly level here of 75.96 on this weekly chart. As we get some perspective as we start the week out. Let's go move into the dollar yen. So the dollar yen posted its highest weekly close since March of 2020. You can see right here. Where it found resistance at 1083. So once again, like I said, that was the best close since March of 2020. But we did find that resistance at 1083, although the market did poke its head above 111. Resistance to start the week will be 1095 with support at 1046. And you can see here on the 2-hour chart, we're trading very, very quiet. And with that, we're going to move into the cash flow index. So the dollar index posted a quiet prior week, sliding back to challenge the 91.50 area, and you can see quiet week was just that. Look at that. We've got a fairly quiet range in here. To challenge the 91.50 area before slightly recovering. Support to start the week will be 91.53, followed by 91.28, and resistance will be 92.06. So you can see right here on the 2-hour chart, fairly quiet, although a little bit of a nice bit here. 91.53, and on the upside, we're looking at 92.06. So no changes here, except that if we were to break lower, we'd be looking at 91.28. Doesn't appear to be the case right now. But to be on the safe side, we'll throw that out there. And with that, we're going to go and move into Bitcoin. So Bitcoin rallied to 35,500 after breaking 30,000 this last week, only to start to fade. A retest of 30,000 looks inevitable, and support on the break would be 26,700, followed by 24,300. Resistance will be 35,478. Well, we're actually making a pretty good little run up in here. Look at this move back. Just when it looks like Bitcoin is going to come apart, I'll move that to a 2-hour chart. Just when it looks like it's going to run out of gas and have some problems, lo and behold, we gap and we move higher. I know people were notating about, I think it's called, I know there was some negative news out of the UK, a watchdog there that was going to go on and cause some hiccups for Bitcoin, but we certainly rolled back in here, and resistance for today is going to be 35,478. And support, well, we did have support in case it broke. Certainly doesn't look like it's going to be the case here, so support at this point is going to be right there, coming across here, all these touches. That would be support at this point, 33,885. Now, this still retaining its bearish bias. You can certainly look at that. There's no doubt about that. It's certainly bearish. We would actually have to get 2 consecutive daily closes above 39,725 to, break that short-term bearishness. And we'll probably need at least 2 consecutive closes over 36,000 just to temporarily stop the bleeding. Actually, I would counter that. Actually, have to be right there. 2 consecutive closes over 37,386 to stop the bleeding, and 2 daily closes over 39,278 would put a bottom in place, at least a short-term bottom in place. Let's go and move on to the S&Ps. Here we are on the daily. We'll take a look here on the 2-hour chart. Boy, we're still up here in the stratosphere. So the S&Ps closed the week at another all-time high. The market continues to stair-step, albeit in tight ranges, for the balance of the prior week. Volume continues to be poor overall, making the index susceptible to a pullback. Resistance to start the week will be 42.82. Was supported 42.63. Followed by 42.55. Now that seems a bit of a ways down, but it's not that far down. But point is, even if we pare back just a little bit, and we'll get to a 30-minute, this market is still way up in here. So as I said, you can see here that just coming down here to challenge this area right around 42.64, we'll put the right there, gives us about around 42.63. That would be the first initial area, and then 42.55. Now, once again, because the volume has been so poor, we'll go in and take a look at the profile. You can see here the midpoint of Friday's session was 42.65. So 42.63 is our initial support. And you can see here this is also the value area high for Thursday for the full session. So it's going to be electronic and regular, what they call regular trading hours. So I like that for the first area support, and then a dip back here. You can see 57 here, value area low for Friday. And if you look on here, you see the red line here. That's going to be the point of control, and that's going to be on Thursday. And that point of control came in at 42.53. Kind of split the difference. We'll say 42.55 for that secondary support. So 42.65, the initial support, and then followed by 42.55, and the point of control there. Also on Wednesday, if you look here, high level price is 42.48. Taking a look with the Nasdaq. Same thing here with the Nasdaq. We're up in here now. We have been up against this 161%. We're not really gaining anything, but we've held up relatively well. The only thing there is a fly in the ointment is we are starting to see interest rates pick up, and that definitely is going to be a fly in the ointment for bear with me, for the Nasdaq. Something we want to be cognizant of. Here's a daily chart of the 5-year, and we are under some pressure. If you look at this on a weekly, and look at the S&P starting to slide here a bit. Not a whole lot, but a bit here. So this is going to be a concern here that you want to definitely be, as I said, cognizant of. So it looks like we're going to have interest rates moving higher, and that's going to weigh. And once again, you're seeing this S&P pull back. We've talked about this. It's been basically a stair step. Take a look at a 2-hour chart. You see we're way up in here. And we've been trading in these tight ranges. I'll go back to the profile. So you can see we've been way up in here, and the ranges have been tight. And not to mention, on an overall perspective, the volume has been poor. So you can see here, look, we had much wider ranges before. And as we moved higher, look how tight these ranges have got. I mean, so tight. So what happens is it makes it susceptible to a pullback. Is there potentially a catalyst? Well, we're starting to see that with these interest rates. And that could go in, as I indicated, open to a slide, and a quick slide at that. We can see a quick slide before we can see some balance, and that may take us really potentially, said the 55, but you probably would be looking at something around the 42, 48, and that slide might come rather quickly. So it's definitely something you want to be aware of as we come into the U.S. session. So taking a look here with the Nasdaq, same thing here. It almost has not been as elevated as the S&Ps, but certainly going to be open to a slide back. I think the initial area would be 14,259. There's going to be some here at 14, let's call it 14,304. And then below that, 14,250, and we'll take a look at the profile. So when we're looking down here, I'm looking at this point of control right there, which confluences with this low here from Thursday. That would put us at 14,270. So I think I'm going to go with 14,270. Yeah, there'll be some support at 14,301.04, but I think it's 14,270. And you know there's always overshoots. And potentially drops us down to, there's 270. Right there. Holy smokes. It's 14,186. Things get a little sloshy. Thing is, you don't want to get caught with your pants down, so you want to know where these areas are, where potentially we can go and slide to. So 14,270, and then you got a bit of a confluence here, the point of control here, value area high here. It's just a 14,186. That takes us now to the gold market. And gold's just been stuck. We've just been stuck. We haven't been able to get anywhere after the slide, get to the gold. So gold has been unable to pick itself up from the recent slide from 1875. Immediate support is going to be 1768, followed by with resistance at 1790, followed by 1803. So 1768. Resistance 1790. Can we slide further? Well, anything's possible. If we were to break lower, we'd be looking at probably about right there, 1752. Let's call it actually 1750. Let's call it 1751. And lastly, let's go and move into the crude oil market. Do have that big OPEC meeting coming up. Crude closed at a new weekly high, stair-stepping since $64. The continuous monthly closing price is 74.23. Resistance above that would be 75.26, which would be where the monthly wicks are. Immediate resistance is going to be 74.76. Looks like we did make another push here. Look how high we got up here. So, 74.45. And look, we're pulling back here. So we said 74.76 for immediate. And support's going to be 73.25 followed by 72.54. There we go. And let's take a look at on the profile. Okay, looks like we made that run up there. As I said, pulling back 73.50. Here's, well, if you look here, the Friday's value area high was 73.64. So we're looking at 73.25. And the POC from Friday full session comes in right there, 73.43. 73.43 also happens to confluence with the value area high from Thursday. So let's go with 73.42. I can get a little bit of an overshoot. And then beyond that, we break further. There's 72.58, the value area high, value area low here, and also value area high 72.42. I like right there all these touches. So let's go with 72.42. There we go. And there's the bias chart for today. Like I said, just an overview if we get started for the week on the various levels. FX is pretty quiet, but one of the things I would be concerned about is starting out the week with S&Ps because it's just been, as I showed you before on the profile, and we'll roll back to that for a quick recap. Look how tight these ranges have been. See, this is more like the range you're going to see. Then it tightened up more. Then it tightened up even more. A little bit better, but still super tight. And look, so this makes this market susceptible to a pretty good little pullback. And look at this. This even here, that's 42.25. So potentially, like I said, I'm looking at this 42.48 on a pretty good little slide. I mean, I think they could bounce maybe around this area here, which is a 42.60. But if we break them, probably not going to find support until testing this 42.48 area here. So just something to be aware of. And I think that slide could come rather quickly. What's the catalyst? Well, as I mentioned, rates are pushing up higher. So it's something that you definitely want to be concerned about. Let's take a look here. Look at this 10-year rate. So that may give a little bit of a scare. And that maybe necessarily wouldn't be such a big deal. It is, but it's still in the lower end. But once again, we've had this run. Look at these other ranges. You see that? And look at this, how thin it's gotten. Not thin, but just how tight these ranges have become. So it makes it susceptible to pullback. Well, with that, we'll call it a session, and we'll see you in the chat room, get the bias chart posted. And thanks for joining us here on the European Crossover.